Welcome to Invested Central's Basic Candlestick Module. I'm Tom Boley, Chief Market Strategist at Invested Central. Technical analysis was used by Japanese rice traders back in the 17th century. Steve Nisan was among the first to introduce candlestick charting to the West. Steve believes the origin of candlestick charting dates back to 1850. Personally, if I had to choose the most important aspect of technical analysis, it would be candlestick charting. I'd give everything else up in order to keep my candlestick charting. It's that important to me. Visually, candlesticks provide so many signals to traders, many of them extremely effective. However, combining candlestick charting with other technical analysis tools such as price volume, moving averages, MACD, which is the moving average convergence divergence, and other momentum oscillators like RSI and stochastics, all of this combined creates optimum entry and exit points and helps educated traders minimize their risk while maximizing their potential returns. Those well-versed in technical analysis have huge advantages in the stock market over those who aren't, in my opinion. On your screen, I've highlighted Apple's 30-day chart to provide you with a few of the candlestick charting basics. This in no way is a substitute of a full-blown candlestick course, so please consider continuing your education in candlesticks and other technical analysis areas before committing too much capital to trading. Okay, I just want to go over a few of the basics here. Again, this is a 30-day chart of Apple. When you take a look at the upper right-hand corner, I've highlighted that red candles mean that Apple finished lower than its prior close. So any of the candles on this chart that you see, some of them have the big red filled candlesticks, some have small filled candlesticks that are red, some are hollow. They're not filled with the red, instead they're just hollow. You see one here on May 15th, there's another one back here on April 28th. All of these red candlesticks mean that Apple finished lower than its prior close. So if you owned Apple on any of these days, you would have lost money from the prior day's close. That's basically what it tells you. Now the black candles, as you might expect, are the opposite. The black candles mean that Apple finished higher than its prior close. So all of the black candles, whether they're filled, like this one on April 30th, or if they're hollow, like these on an early part of May, all of the black candlesticks mean that Apple finished higher than its prior close, so you would have made money if you had been holding. Now, what's the difference between a hollow candle and a filled candle? For that, take a look at the lower left-hand part of your screen here. Filled candles, it doesn't matter if they're red or they're black. Filled candles indicate that Apple closed below its open. The rectangles on these candlestick charts, these are considered the body of the candlestick. What they represent is the top of the candle body and the bottom of the candle body. And here we got one on May 1st I'm pointing out here. That's upper end. Here's the lower side. And again, you go to May 4th. Here's the upper side of the candle body. Here's the lower side of the candle body. All of these hollow candlesticks indicate that Apple closed above its open. If it's a filled candlestick, it means that the close is below the open. So you look for filled candlesticks to help you identify where the open was, where the close was. Anytime you see a filled candle, you closed below the open. Anytime you see a hollow candle, whether it's black or whether it's red, doesn't matter, your close is above the open. Hopefully you get that. Again, the filled candles, you're closing below the open. Your hollow candles, you're closing above the open. Very important. Okay, so let's just take a look at one of these candles. Here's one over here on May 19th. Here we have a hollow candle. And again, if you go down, you'll see hollow candles mean that it closed above its open. So here's your candle body. The close is above the open, so that means we closed at 127.50. And we opened at about 126.85. Just kind of guessing, but somewhere in that neighborhood. Now, these tails are also referred to as wicks or shadows. we refer to them as tails. Here's the bottom tail, the lower tail, and then here's the top tail. The ends of each tail tells you what the high and what the low was for that particular day on Apple. So on May 19th, the high on Apple intraday was about 129.35. The low that day, which is represented by this lower tail, is around 125.80. The open, because it's a hollow candle, the open's at the lower end. The open is at 126.85 and the close is about 127.50. So just quickly looking at that candle, I can tell basically what happened. First of all, we're trending higher. We've got higher highs in place. We got higher lows in place. We gapped up a little bit from the prior day, and then we closed higher. So all in all, not a bad day, although this is considered a high wave candle. And a high wave candle begins to show some indecision, because not only did it trade higher in the day, meaning that the bulls were getting control of the stock, it also showed a fairly strong tail to the downside, meaning that the bears were in control for a period of time. So when you get these high wave candles, it does represent a period of indecision. The bears and bulls, think of a tug of war. They're going back and forth. So it starts, if you're in this uptrend and you're riding this stock long and you see a candle develop like this, it should at least start to send some red flags up. Doesn't mean that it's ultimately going lower. It just means that there are some red flags. Now, I've highlighted a few candles here that I think are important. Number one, off of a downtrend, and the beauty of candlesticks, many times you can just get a one candlestick pattern that will let you know that a trend reversal is, I won't say that you're going to see one, but that the odds are increasing that you're going to see a trend reversal. So when you've got a downtrend in place, in this case, we've got a bullish engulfing candle. And I'm not going to get into the definition of what all these different candlesticks mean, but they're very important to recognize when you're identifying certain patterns in stocks like Apple, for instance. So we had a bullish engulfing candlestick. This is a bullish reversing pattern, meaning that off of this you would expect higher prices. Notice over the next 6 trading days we put in higher highs. If you look at the tail at the top of each trading day, you will see that the prices are going up every single day on Apple. If you look at the lows, you'll see that the lows are also increasing in price every single day. So we've got a clearly defined uptrend in place on Apple. Now, this particular candle that came in on May the 6th is a reversing candle, and it's a bearish reversing candle. This is what's referred to as a hanging man. And if you think about the body coming down here, well, actually this is the body, but the tail representing like the body of a person or something that's hanging down, that's kind of what the hanging man candle represents. And obviously that has bearish annotations if you think about it literally. So off of a candle like this, you might expect that prices are going to continue to move lower. The beauty of a reversing candlestick is that you can minimize your risk. If you're wrong, what you expect is a reversal. So if the stock were to continue moving higher and it closes above the high of the day, you simply get out. So you don't have to risk a lot to the upside if you were to short Apple off of this candle. But take a look at what happened and what ensued over the next 5 or 6 trading days off of that hanging man candle. So it did, in essence, give you a very good prediction as to what might happen. Now, you don't know where or how far the move to the downside will be. You're going to be looking at other technical signs as well. But the fact that you did see a reversing type candle come in off of this uptrend, and you can see that Apple did struggle over the course of the next several trading days as a result. Now when we get back over here to the candle that we were looking at, this high wave candle that showed the indecision because of the long tail on both sides, the next day was a confirmation. This is a bearish engulfing candle where you actually totally engulfed the prior day's candle body. The open was up here, the close is down here. We know that because it is a red filled candle. So when you have a filled candle, Apple closes below its open. So in this case, we opened up, we closed down. So this is a bearish engulfing candle, which has bearish implications for the stock. And again, you can see over the next couple days that Apple did move lower. So again, what we wanted to do here was just give you a little sense of what candlestick charts are all about and how they can impact your trading, and I believe really improve your trading skills and improve your trading results.